Hi, this is Zak Mir with the technical week ahead, and we start off with Home Retail Group, where there's a cracking looking chart here on the daily time frame. We've seen a sharp move up from the bottom of a rising trend channel from December. All the price action in recent months since June has been above the 200-day moving average, and we've got an unfilled gap to the upside, flat bull flag, and then a gap again to the upside through the sort of this saucer-shaped bull flag, something which implies that there's very strong momentum here. In fact, you'll probably be looking for £2 a share target here while there's no end of day close back below the 10-day moving average at £1.73. Shares a bit overbought at the moment, but the momentum here seems to be so strong that you'd really be backing upside before any significant retracement took place. Moving on to a personal favorite of mine, Shire Pharmaceuticals. Recently a chart of the week on zaxta.com. Situation here is that we've seen a bounce off the floor of a rising trend channel from May. That was just below £24, a sort of bear trap below the 50-day moving average at 24.49, and towards August support as well. So we're really looking at hopefully what is a recovery situation here, maybe similar to what we saw in June, where there was also a narrow bear trap below the 50-day line. Here the target probably towards £27 over the next few weeks, and the stop loss really probably around the 20-day moving average level, which is currently at 24.67. You could have it back at the 50-day line itself at 24.49, but really at the moment probably you'd regard any weakness towards the 20-day line as a buying opportunity ahead of £1.50 or more of upside on that situation. Sticking with the pharmaceuticals, and we've got Glaxo, where the situation is that we've got overall sort of consolidation over the past month or so below the 200-day moving average. If we go back a bit, there was a golden cross buy signal between the 200-day and the 50-day moving averages in March, and that's really delivered the bulk of the gains for 2013. A little buy signal here in the RSI window with a break of September resistance line, and probably what we'd be looking for here is an end of day close above the 200-day moving average of 1591 to kickstart the next leg to the upside. Overall, it's a sort of converging triangle formation consolidation zone, but with a rising 200-day line, you'd be looking for a break to the upside sooner rather than later, and £17 target, say, for the end of next month. The next stock we have is Whitbread, the Costa Coffee and Hotels Group, and here it's also a sort of a runaway move from the beginning of consolidation at the beginning of the month. Near vertical push through the 50-day moving average at 30.99. That was still falling, so that adds to the bullishness of the move. And here we have a situation where there's hardly even any time for a bull flag to set in. It just the stock wants to keep going up. Target here around 35.50, 35.80 over the next 4 to 6 weeks. And this should be achieved as we get golden crosses for the near-term moving averages, the 10-day, the 20-day, and the 50-day moving average. So looking very strong indeed, especially while we remain above this former August peak, which was around £33.11. So that's a sort of end of day close stop loss if you're really playing the stock tightly. Otherwise, just use the 10-day moving average of 31.63 as a trailing stop loss. Finally, we've got one of the most volatile stocks around, and that's Kazakhmys, the Central Asian miner. Here it's been a horrible year, really. Basically, it was a sell at the start of 2013, and the bears could have just stayed in there short the whole time. The current situation is that we're trying to build a base here. We're really looking at the old June support as the key level here. The low then was £2.27, and obviously bulls of this stock did not want to see that broken anytime soon. Probably the best way to play the shares ahead of the company's update this week would be to either remain short, as well, you could have done for most of the year, or use the 20-day moving average of £2.64 as a sort of buy trigger. So if we get an end of day close above that, then look to buy the shares and to target the 50-day moving average of £2.88. But really, the downtrend here, or the breakdown, has been the dominant feature, and it's difficult to see how the shares are going to bounce back at this point, unless something very significant changes on the fundamental or even the technical issue. That's it for me. See you again next time.